Before buying a real estate in Miami, you're always asking me, should I buy under the company name or under personal name? What is the difference? Where is the minuses and pluses? If you can please tell us.
Of course. So I also get asked this question a lot. However, the answer is clear. Always you should buy your property under an LLC. There are a few reasons why you should buy a property under an LLC. Actually, which is very surprising to a lot of people from an accounting standpoint, it doesn't make any difference if you buy it under an LLC or under a personal name. However, it is very important in terms of liability. If somebody breaks their leg or something happens at the property that you're renting out, you are going to be personally liable for the damages if you do not have that property under an LLC. However, if it's under an LLC, only the LLC will be liable for that.
Let's say you are the foreigner and you would like to open a company here and you are not physically located here in Florida. Are you able to open a company or no?
Yes, actually, we do get a lot of these requests per day. People from all over the world are asking to help them open a company in the United States. And Florida is actually one of the best states for that because, real estate is great. The market is amazing. So, we have a lot of experience in helping foreign nationals incorporate in the United States. We can do it in any state of your preference. You don't even have to physically be present to open an LLC. You can just send all your documents. Everything is done online. We send you back the documents online as well. And the biggest question that everybody asks is how do you open up a bank account?
Exactly.
Actually, there are many bank accounts, many banks now that do that for you, such as Mercury, Brex, Relay, Revolut. I can send you a list of them, if you would like. And there's no issue with that whatsoever.
When you buy a real estate in Miami, what kind of taxes do you have? Like income taxes, property taxes? There is so many taxes and people get confused. If you can please explain us.
Of course, I understand that's a very big question. Everybody's afraid of taxes in the United States. Everybody's heard that they're really, really large. However, that's not true. Actually, taxes are very, very easy, not so complicated in the United States. What you have to do is you have to pay 3 types of taxes. First one is property taxes. That's obviously what you know better about. It's taxes that you pay on the real estate property for you pretty much owning it. Even if you don't rent it out, if you own a property, you have to pay real estate taxes.
Right. Once a year, you have to pay property taxes, which is 1.8 to 2% from the assessed value of the property.
Other taxes that are present is when you actually make money through the real estate, right? So when you rent out the property, whether it's short-term or long-term, you have to pay taxes. Number one, the most important one is the federal income tax, which is on the federal level, right? So it doesn't matter what state you're in, you have to pay those taxes. They could be different. First of all, I want you guys to know that most of my clients who have real estate in the United States don't pay any taxes at all because taxes are paid on the profit. And usually with all of the expenses that you guys have, like HOA fees, management fees, repairs, supplies, etc., you actually end up with no profit at the end of the year and you don't really pay any taxes because you can use depreciation and different tricks like that. Obviously, you do make money, but you do not really make money for tax purposes. And therefore, taxes are usually very low. If you actually do pay taxes at the end of the year, they vary from 10 to 37%. Most of the time, it's on the low end, so nothing to worry about. And then there is short-term tax, right? So in order for you to, Vika can tell you more about the license, short-term rental.
Right. If you decided to rent your property for short-term period of time, so you always have to pay a short-term taxes. In order to start renting for short-term, you have to get a license, short-term license, and get a certificate, which usually accountants are helping us to get the certificate. And then, of course, you have to pay taxes on the short term, which accountants, again, helping us to pay.
Yes. So, to continue Vika's point, what you have to do is you have to actually get a reseller certificate. That's a special certificate that you need in order to be able to collect taxes from your tenants and then give these taxes to the government. So you are kind of like in the middle. You don't really pay these taxes. All you do is you collect them and you give them to the government. That's all you have to do. And we can help you with that. We can help you obtain the certificate and we can help you file the reports every month.
And we will help you to get the short-term license.
Amazing.
And of course, another question that people are always asking, in United States, in Florida, when you buy, what is the taxes when you're buying a property and what are the taxes when you're selling a property?
Yeah, this is a very important question. A lot of people ask. I agree with you here. So let's talk about taxes when you're buying the property. There actually are no taxes when you're buying the property. You actually benefit from buying a property in the United States if you are a resident and if you are filing taxes here as an individual and you file a 1040, you can actually deduct the taxes, real estate taxes that you pay on your primary residence and mortgage points if you actually take out a mortgage on your property. In the first, closing statement, you pay extra points towards your mortgage. So that is all deductible. That can help you reduce your tax liability. Now, when you're selling a property, that's different. It all depends on if it's a primary residence that you're selling or it's an investment property that you're selling. When it's a primary residence, you actually have a couple of different exemptions that you can use. Let's say if you are a married couple and you are married filing jointly, you can deduct $500,000 of the profit that you made on the sale of the property. Therefore, you are saving so much money in capital gain taxes. However, that is only met with different requirements. Let's say that if you hold the property for more than 2 years, you never rented that property out, you have lived in it the whole time, that's when you qualify for the exemption, which is great. Now, if this property was not your primary residence and you rented it out and it was an investment property, you would have to pay taxes on capital gains unless you do 1031 exchange, which you're gonna...
Yes, 1031 exchange, it's like a long process also, which is a long topic that we have to discuss in another video, but it's coming soon.
Yeah, so if you do not do 1031 exchange, let's talk about, the worst case scenarios, right? When you sell your property, you would have to pay capital gain tax, which varies from 10 to 30% depending on your income, your AGI, your status. Now, another one that's very important is when you're a foreigner and foreign national and you sell the property. There is this thing called FIRPTA that everyone is afraid of.
Right. And people are asking, what is it, FIRPTA? I'm the foreigner. And a lot of real estate agents actually making such a huge mistake by taking the listing and they never say to your client, hey, by asking the question, hey, do you have a social security in United States? Are you the foreigner or no? Because in advance, by taking a listing, you have to notify your client that there is a deductions could be, which called FIRPTA.
Yes, FIRPTA is a withholding, right? So what is FIRPTA? FIRPTA is tax withholding. It's not tax payment, it's tax withholding. Which means that the IRS will take the money, hold it, and then maybe give it back to you, maybe not. Usually they do. So the way it works is, let's say that you buy a property for $1 million, you're a foreigner, you don't have any social security, you live outside the United States, you don't have a company, you're just a person, and you buy it, and then you want to sell it a few years later once the price went up, right? Let's say you sell it for $1.5 million. You have to pay 15% of that to the IRS right away at closing.
Imagine unexpected fee that you get on the closing if your real estate agent didn't tell you in advance. What and not a nice surprise.
Exactly. So a lot of, people get really, really scared with that because that's a lot of money that IRS is going to hold for a long period of time. The way it works is once you sell the property and then you file your personal tax return showing the sale and showing how much money you actually spent to buy the property, how much money you spent to renovate it, etc., and then you're left with a profit, let's say $200,000. So they calculate how much you have to pay on that $200,000 and give you back the money, but it takes a long time.
How long it can take to get the money back?
Can take like up to 3 years, literally,
Oh,
because
wow.
IRS works really, really slowly, especially when it comes to giving your money back. They're very slow. And so they might take up to a few years, and you're going to be sitting there and waiting for the money. But there are ways to actually avoid FIRPTA. If you buy a property under an LLC and then you do the right steps with your accountant to file your taxes properly for the few years before you sell the property, you can actually avoid FIRPTA altogether.
So my advice before applying real estate in Florida, first come to your accountant and actually to our accountant, Medina, and get your consultation and advice in case you're the foreigner, how to avoid FIRPTA and how to do the right steps to buy a real estate in Miami. Medina, thank you so much for having us and for all your answers. Subscribe to my channel and watch the next video.